My name is Dingchao Bao. Today I will present a pitch for Equinix, which is a data center colocation service provider. So let me start from the summary. Based on an optimistic focus on Equinix potential, I believe that the market price of this company is now suppressed. So I recommend a buy for Equinix with a fair value estimation of $989.65 per share compared to its current market price of $822.57 per share. So let me give you some introduction of this company and some information about the market. The global data center colocation market size was valued at $40.31 billion in 2019 and is expected to grow at a compound annual growth rate of 12.9% from 2020 to 2027. In terms of revenue, the retail colocation occupies more than 70% of the market, and the rest is occupied by the wholesale colocation. Our target Equinix is a retail data center and colocation provider, whose headquarters is in California. The company was founded in 1998 by two facilities managers at Digital Equipment Corporation. And by providing data center and connection service with allowing, very amazingly, competing networks to connect and share data traffic, Equinix expanded very fast in recent years all around the world. And now, as the world's largest data center and colocation provider, Equinix has dominated 30.8% of the market with a revenue of $5.56 billion. And both organic growth and large M&A deals that have closed over the last few years have led to growth for Equinix at a 20% rate, surpassing the general market. And about the recent performance, as I mentioned in the business review, the data center colocation and interconnection business has experienced very outstanding growth in the past few years. And with Equinix, obviously, in the vanguard. According to Equinix AR of last year, the company claims 80 consecutive years of revenue growth, which is a very outstanding record. And as of June 2021, the valuation of the company was $86.54 billion, which is 44 more than the value of its biggest competitor, Digital Realty. I think the biggest reason for Equinix success is because of its specialization. Since Equinix only focuses on the retail part of the market, their competitors, for example, the Digital Realty, also focus on the wholesale. So yeah, I think this may be the best reason for Equinix could outperform its competitor. And in general terms, COVID-19 have increased the value of the industry to the de facto growth experienced until 2019. 2020 has brought the per share value of Equinix to a historical maximum of $835.16 per share, which is 43% higher than its price at the beginning of the year. Although I have seen this trend also happen to other companies, the Equinix has again outperformed competition with a 92% higher per share value if I compare its current value to the minimum value in 2020. And for the future of this company, I think Equinix as an industry leader in the cloud ecosystem and digital infrastructure space. And I think that the space has already attracted more and more new business to attend, as well as many companies have already had to shift or focus on their digital transformation over the course of 2020. And I believe the trend will not slow down over the next 20 years. And I also see some researchers or trends that will give impact to this company. According to the IDC, 50% of global GDP will be digitalized, and growth in every industry will be driven by digital enhancements by 2023. And the IDC also mentioned that by 2024, over 50% of all IT spending will go toward digital transformation and innovation. And also, data compliance will be a focus for business all around the world. According to Thomson Reuters survey, which shows that 69% of respondents said successful compliance efforts can drive up business efficiency and effectiveness by enabling greater focus on value-added activities. Equinix itself also projects the continued growth of consumer internet traffic from new bandwidth intensive services. And industry analysts project about 8.4% growth rate for the data center market up to 2022. I also did a DCF calculation of the company's valuation. And the main assumption I made here is about the revenue growth rate. I assume a growth rate of the range between 12% to 15%. And I also assume that the ratio of EBITDA and the revenue margin will between 19% to 22%. And then I calculate the cash flow from 2021 to 2030. And then I also calculate the terminal value. And finally, I got the target price of this company, which is $989.65 per share. In conclusion, my recommendation will be a strong buy, and the target price of this company will be $989.65 per share compared to its current market price of $822.57 per share, which demonstrates that Equinix is now trading at a deep discount of around 17% to its fair value. And that's the end of my presentation. Thanks for listening.
Down the free Auro mobile application now.